Welcome to our DFW Market of the Moment update, week of January 16th, 2023. Michael Oldham and the Oldham team here with Chris Madrid from Caprock Home Loans. What's up, Chris?
Hey. What's up, man?
Hey. Just trying to
Good to be
get
back.
down as usual.
Good to be back. Yeah, for sure.
Good to be at. I had a great class Tuesday. Gonna follow it up today with some accurate real estate and mortgage news. This is where we talk about the DFW housing market, mortgage info, trends, and so forth. So we're going to start off with Chris Madrid, Caprock Home Loans, going to talk about current rates as we speak.
Yes. Yeah. So it's been a slide up and down this week. Overall, rates are trending lower, right? Like we've been talking about. Huge shout out to MBS Highway, because where we get a lot of our data that we share. And my guy Barry over there is he's probably one of the top minds in economics, even though he doesn't claim that. But again, he follows the data, right? And not making stuff up, there's no skies falling. Let's look at the raw data and go from there. So huge shout out to him. That's where we get a lot of our information from. But man, overall, mortgage rates are trending lower. So a 30-year fix today is in the 6% range to about 6.3. Assuming you have pretty decent credit. 15-year fix are down near 5% now. So 5 to probably 5.2, which is great. And like we've been saying, the overall expectation is that rates will continue to move lower throughout the year. Of course, not in a straight line, right? But interest rates are trending lower. So that's ultimately great news. Now, the fact that rates are slightly higher now versus where they may be in 6 months, right? There's some key information, key inflation information that'll be coming out every month, of course, right? But the May 10th report that's going to be coming out, that is a one that we're going to be watching very closely, and that should hopefully help us, like the one that came out in November that did a significant reduction in interest rates. So looking ahead to that, now that's great news, but that could also pose a problem if you're one, a first-time home buyer, and two, just a home buyer in general, right? Right now there's not a lot of buyer activity. Right, there's a lot of buyers that are kind of in and out of the market. I read something this morning, and here we'll just go from the top, right? So the Mortgage Bankers Association CEO expects, kind of like we do, mortgage rates to move lower over the course of the year as the Fed rate hikes have started to cool down the economy, right? Like we've been talking. That will definitely bring back buyers back into the market. So that's great news for housing. If you're an actual buyer, that could be impactful, and we'll talk about that here in a second. The Freddie Mac notes, while mortgage rates have resumed their decline, the market remains hypersensitive, like we've been talking over the last few weeks. Latent demand has been on display, with buyers jumping in and out of the market as rates move. And you and I have kind of seen this as well. So those are just the things that that we talk about. And again, cannot stress enough, if you're looking to purchase a home, it's a great time, because as buyers are kind of jumping in and out of the market, there's more options, there's more opportunities to look from, and you're not having to pay significantly over asking, right? So that's what what I want to stress. And again, if you need numbers, right, if we want to look at what homes are going for, or what are the homes going to cost you, right? Let's talk about, just talk about the mortgage payment. If you're looking at a $500,000 home, right, and you're going to be able to buy that at list or slightly below list, let's look at that monthly payment at 6% or 6.25%. And then if let's just say rates come down in the next 6 to 12 months at a 5% rate, what is that cost going to be if you end up having to pay over list, right? So those are all things that that I can help walk through and kind of navigate, and really that may put your mind at ease as far as financing at a 6% or a 6.25%, and potentially, again, you can always look at refinancing down the road. Right? There's nothing that there's nothing that locks you into to that 6 or 6.25 interest rate. So that's what I can't stress enough. The competition will be back, right? It's just a lot of buyers are on the sidelines right now. So if you're looking to purchase, and again, this is not, man, we don't do pitches, right? This isn't a pitch. This isn't a fear tactic or anything like that.
It's just
right now is a really good time to buy. It's straight facts. There are less buyers out in the market, more inventory, which means more choices. Sellers are more likely to actually negotiate, right? Where once buyers flood the market again, all they have to do is pick the highest and best, right? They don't really care about negotiating. So yeah, those are the big things. Another clip that came out today, builder sentiment, right? Which is, that kind of talks to how many homes builders are going to be building, that whole outlook, right? Overall, it's also trending. It's also trending up. So all in all, present conditions increased by 4 points from builder sentiment. The future outlook, right? So how builders perceive the future of buyers and traffic and all that stuff, that rose by 2 points as well. Prospective buyer traffic increased by 3 points as well. So again, overall builder sentiment, which was the National Association of Home Builders, housing market index, which came out. That's in general, which takes those three things that we just talked about, and it's rated them by a point, right? So in general, the housing market index for builders is up 4 points, which again, that basically says that builders the outlook is improving for the market in general. So
yeah, cool.
We ready
to look at our charts?
Yeah, let's do that. Yeah, so I think right now we're down. Man, it has been a pretty volatile day. I think it started out this morning down about 15 basis points. And now I think we're down about 2 basis points from yesterday, right? So it's just looking at day to day. But again, the green is, when we're looking on that far right side, the green's good. So there's a couple of levels there that we're, obviously that we're pushing up against. That the bottom trend line is the 25-day moving average. So we're staying above that. And then that top red line is what they call a Fibonacci level. So that is probably the level of support that we're hoping to get pushed through, right? But again, until that happens, rates are still good. But day to day, you have to, we watch this every single day, and they're up a little bit, down a little bit. But I think for the most part, we are still trending down. So
cool. Yeah, a lot of green on there today.
Yeah, and really the last couple of weeks we've been making some headway up, and this is one of the it works in reverse, right? As this moves up, interest rates move down.
Yeah,
right? So it's not.
If this is something I wanted to make sure our viewers understood, that as this MBS chart ticks up, your interest rates are ticking down. So don't misunderstand this chart.
Yeah, green good, red bad.
Yes, and if this chart is ticking on an upward trend, it's most likely that interest rates will be ticking on that downward trend. So
absolutely.
Anything else on this? I know
no, it's all moving in the right direction.
About staying over the 100, getting over the 101, trying to get to the 102 mark.
Yeah, 102 is really where we're.
I think every week we seem to get a little closer. So
a little closer. Yeah, absolutely. Absolutely.
All right, let's talk a little bit about active existing homes that are listed in the United States. This is obviously a little over 5-year look. What did you share on this one?
No, just again, I had caught another clip online about, that we're headed into a housing bubble, right? We keep hearing just the negativity on the news. No, and again, just at a first, a first glance, when we get all the way to the right side, which is the December numbers, right? Because this data is typically for the month that we just came out of, right? It does, ultimately it looks like there is a downward trend. We can see that that gray line, if anybody's interested in knowing, that was the last recession of 2020 that has been technically called. Yeah, the verdict is still out on whether or not we are already in a recession or if we're going to be moving into a recession, right? As the Fed continues to tick up the federal funds interest rate, that of course is slowing down the economy and it's just inevitable, right? It's either we're in it or pushing us into a recession. But again, yeah, this is just, taking this at face value. It looks like active existing home listings are declining. And the reality, right, if we kind of, look back, it's a cyclical, it's just how the kind of the market works. So again, it's just, at the end of the day, it's important to have this information to look back. And again, for the viewers watching, you can Google active existing home listings in the US over the last 5 years, and you can pull this kind of a similar chart up. And again, this is just the data and the information that's out there that we want to share, right? So you can go pull this up and verify the information. But again, it's not as doom and gloomy as they are reporting on the news.
I think it pretty much shows that home listings follow a seasonality. Obviously, it looks like pretty much every January we dip, and then in the summers, Julys, we rise. And
well, yeah, the spring, right? You can kind of, if you're looking at it, you can kind of see it in 2019. Obviously in 2020 there was still a pick upward. 2018 it declined in January, of course, and it started to tick up, and that's like spring to summer, right? Which is typically, if you're going to list a home and you want your kids to be able to finish school, right, you're going to list it in the spring, because then if it takes a month or two to sell, well, then your school season is typically over, right?
Yeah.
And the same thing for summer, right? If you're trying to make a move, you want to do it before you have to re-enroll your kids in August or September. So anyway,
and personally, as I look at this chart, it tells me if I'm going to sell my house, I need to be getting it prepped and be ready in about March, most likely. Just judging by this. So, all right, well, let's get into our housing numbers. If you don't have anything else to add.
Nope.